Yes, ma'am, please. You may start. Yes, ma'am, please.
A very good morning to all the. Am I audible?
Yes.
A very good morning to all. I, Smrita Bhadoria, rapporteur of 9th Technical Session on Financial Management of 12th International Conference of Prestige Institute of Management Gwalior on digitalization as vehicle for innovation, organizational growth and effectiveness. It is my privilege to welcome Honorable Session Chair Professor Dr. S.K. Singh, Co-Session Chair Professor Dr. Sanjeev Gupta, Keynote Speaker Professor Phyllis Ange Kutluk, delegates from different part of globe and viewers on the various digital platform. First of all, I would like to introduce to you all the session chair of today's technical session, Professor Dr. S.K. Singh. Professor Dr. S.K. Singh obtained AMCOM. He is gold medalist in AMCOM. AMPhil PhD from Jivaji University, Gwalior. He is professor at School of Commerce and Business Studies, Faculty of Commerce, Jivaji University, Gwalior. He has served as ex-proctor of university. He has more than 94 published research papers to his credit in various national and international journals. He has authored, edited several books. Furthermore, he also served as Dean at School of Commerce and Business Studies, Faculty of Commerce, Jivaji University, Gwalior. Thank you, sir. We are very grateful to have with us. Thank you, sir. Now, I would like to introduce to you all the co-session chair of today's technical session, Professor Dr. Sanjeev Gupta. Dr. Sanjeev Gupta is working as professor in Department of Commerce at Government SLP PG College, Murar. He is position holder at AMCOM level. Adding to it, he is PhD qualified. He has presented many research papers at various national and international conferences. At present, more than 90 national and 65 international papers are credited to his name. Apart from this, 15 scholars has completed their PhD under his guidance and few are in pipeline. He has edited more than 7 books and co-chaired many technical sessions in national and international conference. His specialization is in accounting and finance. Thank you, sir. Your presence is extremely valuable for us. Thank you, sir. Now, I would
Thank
like
you.
to request to Dr. Nandan Valinkar to introduce keynote speaker of today's technical session, Professor Phyllis Ange Kutluk. Sir, please.
Thank you very much, ma'am. Good morning to all. Professor Dr. Phyllis Ange is currently associated with Agdanis University, Faculty of Applied Sciences. She is heading the department, Faculty of Applied Sciences, Banking and Finance in Agdanis University since 2018. Professor Ange is a visionary academician and researcher. She has completed her PhD from Mediator-Name University. Her doctoral thesis has been appreciated many times as a focused piece of original research in the area of behavioral accounting on various renowned platforms. Her research areas are accounting, behavioral accounting, accounting ethics, and accounting education. She has more than 50 international publications in well-renowned journals in her credit and attended more than 30 conferences on various national and international platforms. She is an authorized referee and reviewer in many reputed journals. Professor Ange has chaired more than 40 conferences, seminars, and symposiums. She has also delivered keynote addresses on many international platforms. Apart from 5 scholars has completed their PhD under her able guidance, and few are on stage of thesis submission. Thank you, ma'am. Your presence is really important for us. Over to Smita, ma'am.
Thank you, sir. Thank you, sir. Moving ahead, there are 17 papers that are going to be presented in the technical session. The time allocated to each presenter is 8 minutes for the presentation of research paper and 2 minutes for handling the queries. I request to all the presenters to adhere to the time allocated. I'm just announcing the sequence of the paper. Uh, but before this, now I would like to request to Professor Phyllis Ange, ma'am, kindly give the keynote speech, please, ma'am.
Mute yourself.
Now, can you hear?
Yes, yes, ma'am.
Okay.
Yes.
Okay,
Yes, ma'am.
thank you.
Yes, ma'am.
Firstly, I want to say it is a pleasure for me to be invited to this 12th International E-Conference. I want to thank to Dr. Davish Jain, Dr. Bakar, Dr. Ruturaj Baber, and to organizing committee, to colleagues in Prestige Institute, and I want to say welcome to all dear guests. It is my third time to attend this conference from Prestige Institute. And the first time was I met the worthy colleagues during my first visit to India in January 2017. And since then, I have emotional memory with the colleagues of this institute. Today, I want to speak about accounting education in digital age in relation to international education standards. And I want to ask, can I share my screen? I have only a few slides, but to be seen the headings. For that reason, I ask it.
Yes, ma'am. You may share, please.
Okay. No, pardon. So, I am Professor Filiz Angay Kutluk from Faculty of Applied Sciences in Akdeniz University, Antalya, Turkey. And the headings are like this. So, accounting is one of the most important sources in business life because accounting knowledge is necessary to produce accurate and reliable financial tables and for decision making. Public trust can be built by reliable financial knowledge and well-educated and ethically acting accountants in accounting world. Accounting profession has also influenced by the requirements of the changing world, and they should keep themselves up to date with the latest developments to adapt the change. The age now we are living in is called as a digital era. And in the reality of the rapid technological evolution, businesses, members of the professions, and education institutions should adapt to digitalization process to get forward and also to generate and apply new strategies to challenge the change. When we compare it with the last couple of years, it has gone further so quickly that new technological developments arise before we adapt to former. And we could also check this by our two studies some years ago. So some years ago, we wanted to determine the mobile learning perspectives of university students who have accounting lessons, and to detect the differences of the perspectives and benefits of mobile technology on accounting lessons. Generally, it should be said that students haven't used mobile devices effectively for accounting lessons at that time, but they were interested in using them in the case of technical support. And 2 years later, we repeated the study in that time's richer mobile variety environment and compared the results with the previous one. Using mobile devices for learning or educational purposes and making research or homework about mobile accounting lessons were increased really remarkably. Students were insisting the thought that using mobile devices for learning purposes would be easy and accounting homework will be done quickly. At that time, we also understood how rapidly the technology developed. The international accounting now, I want to speak about the international standards. The International Accounting Education Standards Board, IAESB, that is part of International Federation of Accountants, establishes standards in professional accounting education area that prescribe technical competence and professional skills, values, ethics, and attitudes, and increases the competence of the global accountancy profession, contributing to strengthened public trust. Underlying concepts and definitions of international education standards, IESs, are presented by Handbook of International Education Pronouncements. And these 8 IESs are as follows. First one is in entry requirements to professional accounting education programs. It was existing since 2014, revised, active since 2014. Initial professional development technical competence. It will be revised in 2021. Again, IPD professional skills, again, will be revised 2021. IPD, professional values, ethics, and attitudes, again, will be revised in 2021. IPD, practical experience. IPD, assessment of professional competence, continued professional development, and professional competence for engagement partners responsible for audits of financial statements. Again, it will be revised in 2021. So in exposure draft 2018, it is mentioned that IASB strategy 2017 to 2021 and work plan of 2017 to 2018 identified important macro trends that are impacting the professional competence of the accountancy profession. These trends, especially the disruptive potential of information and communications technology situations where trust in the profession has eroded, and the increased use of intelligence systems, data mining, and predictive analytics in decision making challenge how professional accountants perform their roles in the workplace. So IASB concluded that the extant ESs need to be enhanced because a development is needed in areas of information and communication technology and professional skepticism. Professional accountants need these skills to perform their roles completely and provide high-quality financial reporting and auditing. As the demand for the skill grows, IASB proposed revisions to learning outcomes of ESS 2, 3, 4, and 8 for information and communications technology, and professional skepticism are expected to improve the consistency, quality, and relevance of initial professional development and continued professional development undertaken by aspiring and professional accountants to be effective for implementation approximately January 2021. And also the handbook 2019 mentions that in June 2019 meeting, the IASB approved the revisions. So, education standards also insisted accounting professionals should be adapted to the technological developments and got analytical skills to meet the necessities of the age. As the necessity starts from educational level, curriculums of undergraduate and graduate programs should be updated that students to gain analytical thinking and reasoning skills, and also by adding necessary courses such as data mining. Future accountants are generally trained in business administration programs and also in programs that have education solely about accounting and finance. For that reason, when we mention about curriculum, we mean both accounting and business programs. By well-educated and analytically thinking accounting professionals, the competence of the global accountancy profession will increase, and they perform their roles completely and provide high quality financial reporting and auditing. And yesterday, during the opening ceremony speech, as Dr. Pavan Singh says, I also believe that everything is for humanity. So I want to thank again to the organizing committee and to the guests. Thank you very much.
Thank you, ma'am. Thank you for the word of wisdom, and your speech was very knowledgeable for us. Thank you, ma'am.
Thank you, not at all.
So, moving ahead, I just want to request to our session chair and co-session chair. Shall we start the presentation, sir?
Yeah, yes.
Okay, sir. Thank you, sir. So I'm just announcing the rules for the participants, those who are going to the present the paper. There are 17 papers that are going to be presented in the technical session. The time allocated to each presenter is 8 minutes for the presentation and 2 minutes for the handling the query. I request you all, the presenters, to adhere to the time allocated. And the first paper is The Determinants of Financial Personality and Investment Bias, a study of women in education sector. Miss Nidhi Jain.
Hello everyone, am I audible?
Yeah, you are audible.
Thank you, ma'am.
Acha,
Share
I'm
my
just,
slides.
yeah, just wait. जी यहाँ से दे
यहाँ सर्च करिए, पहले नाम सर्च करिए, बस यहाँ इस पे जाइए, कैमरे पर मोर पे co-host. अरे यार आप ही दिखाएंगे.
Nidhi, are you able to share your screen?
Just a second, ma'am. Let me check.
Yeah.
Yes, ma'am. Thank you.
Yeah. मैंने वो सबको लगा दिया.
Shall I start, ma'am?
Yes, yes.
Hello everyone. Good morning to one and all. My name is Nidhi Jain. Let me get my introduction first and then I'll be starting my slides. I'm a research scholar working under the guidance of Professor Tarika Sikarwar and my co-guide is Professor Yogesh Upadhyay sir. For this paper, I have worked with my co-author, that is Tarika Sikarwar ma'am, who is also my guide. Let me start with my presentation. My topic is Determinants of Financial Personality and Investment Bias, a study of women in education sector. I would like to start my paper with a quote by Margaret Mead. Children must be taught how to think and not what to think. The variables of my study is two. My paper has been divided into two parts, that is personality type and investment bias. Personality type, I have used the Karen Horner's theory, which has been said by the CAD model, which explains compliant personality, aggressive personality, and detached personality. And the investment bias are comprised of the three parts: risk aversion bias, herding bias, and overconfidence bias. The significant reviews of the research paper has been, due to the time limit, I have just significantly tried to deliver the major 5 significant reviews which has been there. Women academicians, due to the lower income generation, they live in the fear of living in financial breakdown. Hence, they are underconfident, follows the herding bias, and prefer the safe investment. That is, they are risk averse. If I talk about the education background, if the women are having the financial knowledge, they are more confident and follows the less herd. Starting early, that is the investment experience, it helps a lot of to the women investors in taking the right financial decision. Married women, since they are having the support of their spouse and having a much guidance, they are able to make the proper financial decision. Personality also plays an important role. Well, personality is not developed in a day or two. Rather, it's an amalgamation of the childhood experience one possesses. For this paper, my objective is to find out the determinants of financial personality type and investment bias. My conceptual model has been divided into two parts, which says the compliant, aggressive, and detached. Let me say you one by one what it says, and then I'll be showing my results. Compliant personality type is the compulsion behavior when the person moves towards the person. If they are friendly in order to the crisis. If they follow any crisis, they are moving towards the people. Aggressive personality, they move away from the people. Detached personality, they just stay away and do their own task, and then accordingly they take their financial decision. If I talk about the investment bias, three investors bias has been taken, the variable risk aversion bias. According to the Investopedia, the term in risk aversion describes the investor who chooses to preserve of capital over the potential for a higher than average return. It means they are not focusing on much or return. They prefer the safe investment. The risk aversion is there. Herding bias. According to the Investopedia, herding is a situation when there is lack of individual decision making or thoughtfulness, which causes people to think and act in the same way as the majority of people around them to do. Like they are not having their own mindset. This is known as herding bias. If I talk about the overconfidence bias, according to the same website, overconfidence and herding bias is directly proportional. It means believing the ability is greater than the available evidence. It leads to planning fallacy. According to me, overconfidence is that if I can do, it is confidence. But if I can only do, that only word adds to the overconfidence. Now, let me share for this research paper, I have taken the sampling size, population, the women investors are there, and 275 respondents has been chosen. This takes me to the another slide, which says me the demographic profile whom I have taken. So my study is more relevant to the age group of the women who belong from the 25 to 35 years women academicians. The marital status where the unmarried women is there, my study is relevant to those. Education background, when the non-finance related has participated more in my study. If I talk about the investment experience, 1 to 3 year old has played a major role in my study. Preferred investment option, I asked about to all the women investors about the preferred options. Most of them preferred the bank deposits, followed by the gold, and then the post office deposits. Which takes me to another slide. Hello, am I audible? Sorry, my slide has been stuck. I'm resharing my slide.
Yeah.
Okay. Yeah. So tools which I have used for the study is exploratory factor analysis, the reliability analysis. Reliability analysis tests the internal consistency of the questionnaire. In my questionnaire, the two constructs has been there. One is personality type and another one is investment bias. Cronbach alpha is fairly good, which one says the 0.930 and 0.929, which is quite adequate. Kaiser KMO value states the sample adequacy. In my questionnaire, in my research, 0.922 and 0.923, which is also quite good. KMO value should generally lie between 0 to 1, and my lies in that, so it is adequate. If I talk about the exploratory factor analysis, variation method has been used. There are two constructs. The most explained variance has been done by the construct 1, and in the construct 2 the variance number to 1, that is 4, which has been explained 22.496%, which has been explained by the fourth variable and the first variable respectively. Accordingly, we have renamed the exploratory bias. Personality type first has been named as aggressive personality type, second has been named as compliant personality type, third has been named as detached personality type. For this, we have removed the two questions from the questions since due to the cross-loading. And in the investment bias, the highest number of variants which has been contributed is by the adaptability and achievement. Accordingly, followed by the assurance and coping up with stress and perceived investment outcome and social influence. Conclusion. What I derive from my study is that personality plays an equal important role in making investment decision. Personality is created by the childhood experience, which plays an important role in shaping one's personality. Bad childhood experience leads to anxiety, which later affects a woman's investment decision. It is crucial to make children comfortable about learning finance since childhood. Implication for whom my study would be implicable and most relevant to anyone who needs introspection, any person who wants to see how their behavior is not developed in a short span of time, rather it's a combination of two, that is nature and nurture. I have talked about nature in this, so your behavior is the amalgamation of the childhood experience. Experts in the field, anyone who wants to give a suggestion to any person or the women investor in which they must pursue, they must see this my research. My research is relevant to those people who wants to give suggestion to the people in which they want to invest. Concerned authorities, if they want to make policies, my study is relevant to those people. Parents and guardians, yes, these are importantly equal and they cannot be ignored. Why? Because in the childhood, most of the influence is of the parents and the teachers. They both equally played an important role. So parents must give a nice experience so that ultimately the women or the girl will gain the confidence and will take their decision accordingly in the future. Future academicians, yes, my research plays an important role and plays open a huge vistas for the future researchers. Thank you, everyone. Future guidance. Future guidance is what are the significant, what are the limitations which which my research had, or the future guidance I would like to give to the future researchers. My sample size only comprise of 275 respondents. They could definitely increase that. Area covered is very limited due to the time constraint. Gender specific, I have generally covered the women specific investor, women investors in the education field. They could go to more investor, they could go to more area. Limited factors taken, only personality has been taken, more factors could be included. I would like to end on the note, children must be taught how to think and not what to think. Thank you, everyone. Have a great ahead. I'm open to queries. Sir.
Thank you, Nidhi. Sir, please.
If any participant have any query or panel member if have any query, they can raise the query. Otherwise, I would like to request session chair or co-session chair, and they may tell us to proceed to call the next participant.
या पहले प्रेजेंटेशन करवा लो नहीं सभी का.
जी सर. जी सर. Thank you.
जी.
Thank you.
Up next, presentation on the title of Venture Capital Funding in E-Commerce Firms in India. Jivesh Sharma. Jivesh Sharma, are you there? Jivesh Sharma is not in, I think.
Please call next.
Okay.
Please
The
call
next presentation is on the topic Analytical Study of Technology Wise Effect of Foreign Direct Investment in Manufacturing Industries on Indian Economy. Dr. Valumani, E. Valumani. Are you there? Up next, our study on capital structure with respect to startups. Mr. Saptarishi and Sahana Sheth.
Yes, ma'am.
Okay. So, Sahana, are you able to share your PPT?
Yeah, I'm able to share.
Okay.
Is the screen visible?
So, Jivesh,
Is the screen visible?
Yes, yes.
Good morning, everyone. My name is Sahana and MBA student of KLE IMSR College, Hubli. Today I'm going to present on a topic, a study on capital structure with respect to startups. My co-author is Professor M. Saptarishi. Keywords, capital structure, startups and fundraising. Variables of my study. Variables of my study. As per Nancy Hugebert and Linda M. Van de Gutsch 2007, startups firms are unique in many ways. They are not any existing company's branch or division. They are completely new to the environment without any history or reputations. Innovation are primary factors behind the growth of startups according to Sloan 1957. The study conducted by Nancy Hugebert and Linda M. Van de Gutsch 2007 says that the firms and financer may use more than one of the components, that is, leverage, debt mix, or the maturity structure of the debt simultaneously to reduce the information and incentive problems. Startups firms in traditional industries are mainly financed with equity invested by the entrepreneurs, their families, and friends, with bank loans and with the trade credits. A research gap fulfilled by this study is the financial contribution in terms of capital structure of startups in Karnataka region limited to 25 startups. The objectives of this study was to study the capital structure of 25 startups and to know the challenges related to capital structure of startups and problems faced by the startups during COVID-19. Detailed research methodology. This is descriptive and exploratory research. Here, relevant reports and research papers were collected from various sources like EBSCO, Google, etc. These information were used to writing the introduction and literature review. An online survey was conducted through a structured questionnaire. The questionnaire for the survey was formed with the help of Google Form and circulated to startups through online means, that is email and WhatsApp, and it was circulated to all the startups of Karnataka. Out of those, 25 startups responded to the survey. A data collected through this survey was analyzed using statistical package for the social science, that is SPSS software. The data analyzed was focused on percentage analysis and frequency distribution. The data representation was done through bar charts and pie chart. Results of the study and discussion. The findings related to the demographic details. That is, 64% of respondents were young people of age between 20 to 30 years old, and above 40 years are very few. It indicates that most of the startups are started by young people, and 96% of startups have been founded by the male candidate. It indicates that the contribution of female to the startups are very low. Finding related to the types of startups. Most of the startups' legal status is sole proprietor, private limited, and partnership. There are only few non-profit startups. It indicates that young people are business oriented and profit oriented. Most of the startups are under IT sector. After IT, it comes manufacturing, e-commerce, advertising. It indicates that many startups are interested to work in IT sector industries. Most of the startups of business are service oriented. It indicates that service oriented startups are at finding related to the founders of the startups. Majority of the founders, that is 48% of startups, are BE Tech graduates. It indicates that BE graduates have a lot of innovative ideas in competitive environment. Most of the founders of startups are not from family business background, and most of that is 50% of founders gained experience by working under different companies and then they start their startup. It indicates that the founder always try to gain experience before starting their startups. Major sources for funding for the startups. Startups do not require more fund to start their business. They require around 1 lakh to 3 lakh rupees to start their startups. And more than 50% of startups raise these funds from own saving or take help from families and friends. It indicates that the startups do not want to take risk by investing more funds, and also they try to avoid risk by taking loan from outsiders. Capital structures of the startups results. In majority of startups, the owner contribution is more compared to the debt contribution at an initial stage. Most of the startups have 100% owner's contribution and no debt contribution. It indicates that most of the startups are self-dependent. Apart from the initial investment, the startups need additional investment. For that, the 37% of startups approach their families, 25% of startups invest from retained earnings, and 22% of startups approach banker to raise the additional fund. It indicates that apart from the capital investment of the company, it also requires additional fund in between to run the startups. As the startups grows and expands, the owner's contribution percentage starts to decrease and debt contribution percentage start to increase in the startups. 44% of startups which had 100% ownership contribution at an initial stage, now only 16% of startups have 100% ownership owners contribution. 52 startups which had 0% of debt contribution at initial stage, now only 24% of startups have percentage of debt contribution. Findings related to the benefit got by the startups. 37% of startups have not got any benefit from the government of India. Some startups got a tax exemption and few other benefits like startup patent application and IPR protection. Very few, that is only 3.4% startups got all the benefits given by the government of India. Few startups, even though they are eligible to get tax exemption, they do not opt for it because they want to have government tenders. It indicates that government needs to take steps so that all startups can enjoy the benefit. Findings related to the difficulties faced by the time of taking loans. Many startups face difficulties like requirement of collateral, requirement of personal guarantees, interest rate and terms of credit, etc. while applying the bank loan. 27% of startups have not taken any loan because of the requirement of collateral, and 21% of startups have not taken any loan because of interest rate and terms of credit. It indicates that even the startup want to raise funds from loan, but they can't. Findings related to difficulties faced by the startups during COVID-19. 68% startups are facing financial difficulties during COVID-19 outbreak. 28% of them approach family and 16% of startups approach to bank loan to overcome this crisis. More than 50% of startups agree that during COVID-19
Sahanu,
times.
please conclude your paper because 1 minute is left.
Okay. Just give me a second. Government support and do not and they're not great extent, but at a level they are supporting the startups to overcome their situations. The implication and significance of this result are: the present study has huge implication for startups, other startups, policymakers, and loan provider, and many others. The startups should not depend only upon the owner's funds, but also should take the debt so that they can reduce the risk. The startups can avail the low rate of interest so they can have leverage benefits, and the government should take programs or the any policies to encourage the women entrepreneurs. The bank should reduce their procedures while giving the loans to startups. This can encourage the startups to take more debts. Conclusion: there are different combination of capital structure, but the startup should choose that combination which is optimal and which can get more benefit to the startups. Choosing the right combination of capital structure is very important to run the startups. In overall, it can be concluded that right combination of capital structure is very important to all the startups. Thank you.
Yes. The next presenter is Mr. Nishant Kumar. Mr. Nishant Kumar, are you there?
Yes, sir. Am I audible?
Yes, sir. You are completely audible. You can share your screen, sir.
Okay, just a sec, sir. Am I audible, sir?
Yes, sir. Yes.
Okay. Good morning, all. I welcome all the dignitaries for this conference. And my topic for today's conference, that is research outbreak, is that is role of perception towards investment behavior. And myself, Nishant Kumar, from assistant professor at Arkajan University, in the Department of Commerce and Management. So the keywords that involved in my research paper are COVID-19, stocks, capital appreciation, behavioral finance. Variables of the study are: there are some research journals, articles which I have taken into consideration. Then that is Michael M. and Pompian, that is in behavioral finance. Prashant K. and Das. Sorry, there is some little disturbance. Okay. And impact of psychological influences on investment behavior. And there are other few journals which I have taken. the research gap that is being fulfilled by my studies, what we have in investment behavior, what we have thinking, the due to this pandemic crisis, the investment behavior has been completely changed as to what the previous scenario used to be. The investors reacted in a different manner if whatsoever this crisis has happened, and many of the investors who were rational decision makers, they also gave to behavioral biasness, what we call, and towards irrelevant and illogical decisions that they took. Now, the study which I have done here, that is to study different behavioral biases, that includes how you changes your rational decision, and despite taking resort to some behavioral biases, there are some irrational decisions that you make. So objectives of my study is, mostly we do investments to beat the inflationary measures and to earn the handsome profit. But this is not the case when there's some behavioral biases that creep into our investment behavior, because the logical decision what we take, it depends on the proper research and the proper guidance from the professional. But we have seen, per se, when it comes to financial investment, like when somebody is going to the doctor, they are having a medical advice. If somebody is building it, they are going for the engineering. But when it comes to financial decision, most of the people, or most of the investors rather, they don't go to the expert, and they tend to resort to some behavioral biases that we will be discussing further. So this my objective is to study that which behavioral biases tend to get more effective, and which behavioral biases tends to erode the future plans of your investment. So the research methodology which I have used is it's exploratory study, and I have been through different. I have read different articles. I have observed different papers and different websites, and then through them I did a systematic review, that out of which context in my research they are helpful, and to what extent. Now, my results of the study displayed that this psychological behavior, or this behavioral bias that aroused due to the psychological behavior, it's very complex to ascertain the relationship, as to there are number of biases that is involved in our mind, and our mind tend to resort to different biases, behavioral biases, when given the preferences that is being involved. Because if there is one situation, I would act in a different way, and if there is some other situation, I would again act in a different way. If taking the example of this pandemic COVID, the investments what the people or the rational minds have made, that when we are investing, then we know that market would fall down and it would eventually rise. But when actually market did fall in midst of the pandemic, then what happened? Most of the logical decision also, they went pending, they went haywire, and what happened is that investors, they again, due to psychological fear, they pull all their money back and they squared off their position. So when we know what is the fundamental thing and what is correct, then also then also we are not giving a particular view to that point. So my conclusion to my research says that because it's very difficult to establish different biases involved, and when it comes to investing, the majority of investors don't go by logic and rationality involved. They always tend to resort to some behavioral biases. Especially, in my research, I've observed that there are some biases which are more predominant than the other biases which are being involved. Especially when it comes to personality traits and the emotional part that is being involved in it, majorly affects your rational decision making and tends you to turn your mind towards the illogical or irrational decision making in your investment approach. So this was my research. Thank you.
Technical session.
Okay. Thank you very much, Mr. Nishant Kumar. Thank you very much.
Thank you, sir.
Okay. Now I'm calling the next paper title that is Assets and Liabilities Management with reference to HDFC Bank, and the authors are Ambika V. Shetty and Vishal Hanni. Can I request anybody from you? Please share your screen.
Yeah. Is it visible, sir?
Yes, it is visible. Please share it again. It was visible actually. Hello.
Hello.
Please share your screen.
Yes. Good morning, everyone. I am Ambika Shetty. Here I am going to present a research paper on assets and liabilities management with respect to HDFC Bank. My co-author is Vishal Hanni and Professor Saptarishi Mukherjee. Abstract of the paper.
Madam, please share your screen first, please. Your screen is not visible. Yes, it is visible now.
Sorry for the inconvenience. I am Ambika Shetty. Good morning, everyone. I am Ambika Shetty. Here I am going to present a research paper on assets and liabilities management with respect to HDFC Bank. My co-author is Vishal Hanni and Professor Saptarishi Mukherjee.
Please directly come to the introduction part. No need to start.
Yes, abstract of the paper Asset and Liabilities Management with respect to HDFC Bank, how they manage is helpful to how they manage and monitor the risk and mismatches between assets and liabilities. The prime importance of the paper is to understand the maintenance of assets and liabilities, and this paper is to know the trend in assets and liability management over the last 10 years to understand liquidity position of HDFC Bank. The paper is based on secondary data. The major source of information is the annual reports prepared by HDFC Bank, journals, magazines, and other similar studies. From the paper, it is clear that HDFC looks forward to generate a more favorable service in the near future. The balance sheet of the company has been consistent and gives a hint of growth and expansion. The increase in interest income for the consecutive years, so also the net interest income, proves that the profitability of the bank is also increasing over the last 10 years. The increase in assets as well as liabilities of the bank shows the bank has an improved balance sheet. Keywords. assets and liabilities management, liquidity position, net interest income, net interest margin, liquid assets, prime assets, economic equity ratio, short-term liabilities, and market liabilities. Introduction. Assets and liability management is a strategic approach of managing the balance sheet dynamics in such a way that the net earnings are maximized. This approach is concerned with management of net interest margin to ensure that its level and riskiness are compatible with the risk-return objectives of the bank. The purpose of ALM is to enhance the asset quality, quantify the risk associated with the assets and liabilities, and further manage them in order to stabilize the short-term profits, the long-term earnings, and the long-run sustenance of the bank. Variables of the study. Assets and liability management is a strategic approach of managing the balance sheet dynamics in such a way that the net earnings are maximized. Spandan Rao, AD 2015, 5. An effective ALM technique aims to manage the volume, mix, maturity, rate, and sensitivity, quality, and liquidity. A study on asset and liability management in ICICI Bank, Selvin Surjit, and NPA and its importance with reference to Azad Cooperative Bank. Research gap fulfilled by the study. Trend analysis on asset management and liability management of HDFC Bank over the last 10 years from 2011 to 20. Hypothesis and objectives of the study to know trend of asset and liability management over last 10 years. Research methodology. Nature of the study. The main focus of the study is to understand the asset and liability management of HDFC Bank. The major source of information is the annual reports prepared by HDFC Bank. Sample design, secondary research. Tools for data collection. Here relevant reports and research paper were collected from various sources like annual reports of HDFC Bank from the website, bscindia.com, EBSCO, Google, etc. These information was used for introduction and interpretation. And tools for data analysis, trend analysis, ratio analysis, and data collected was analyzed using Microsoft Excel. The data representation was through line chart. Further will be continued by Vishal Hani.
Good morning, everyone. My name is Vishalani, and I would like to present the further part, that is analysis and interpretation. In the data analysis presentation represents from the above table and the graph shows the interest earned is continuously increasing from the year 2010-11 to 2019 and 20. At the same time, interest expenditure is also increasing continuously during the corresponding year. Here, the rate of increase in interest earned is more than the rate of interest expended. Hence, net interest income is continuously increasing. Next slide. Next slide. Yeah. In this, data analysis represents from the above table and graph shows the value of total liabilities is continuously increasing from the year 2010-11 to 2019 and 20. And the percentage increase by decrease in the value of assets, which is around 20%. Maximum percentage decrease in the value of liabilities from the year 2010 and 12 to 2012 and 13, and in the year 2017-18 to 2018 and 19, and there is a sudden increase in the year 2019 and 20. Next. In the data analysis represents from the above table and graph shows the value of total assets is continuously increasing from the year 2010 and 11 to 2019 and 20. And the percentage increase in the value of assets, which is around 20%, and that is a healthy sign. In the data analysis represents from the above table and the graph shows the value of economic equity ratio. It is around 9 to 11%. Further infusion of capital is required to maintain the level at 10%. In the data analysis represents from the above table and graph shows the ratio of short-term liabilities to liquid assets is ranging from 4 to 10%. This means that bank surplus short-term liabilities which is to be deployed only in liquid assets to meet the repayment obligation of the short-term liabilities. In the data analysis represented from the above table and graph shows there is a decrease in liquid assets during the year 2011-12 and 2012 and 13. Otherwise, it is on increasing during the year expect from the 2010 and 11. The ratio of liquid assets to total assets is ranging from 3 to 5%. In the data analysis represented from the above table and a graph shows the ratio of short-term liabilities to total assets is around 3%. In the data analysis from represents from above table and graph shows there is a decrease in prime assets during the year 2010 and 11, 13 and 14 and 17 and 18. Expect for the year 2010, 11, 13, 14 and 17 and 18. The ratio of prime assets to total assets is stable during the year ranging from 5 to 6%. In the data analysis represent from the above table and graph shows there is a decrease in market liabilities during the year 2018-19. Expect from the year 2018 and 19. The ratio of market liabilities to total assets is increasing during the year ranging from 5 to 10%. Results of the study and discussion. Rate of increase in interest earned is more than the rate of increase in interest expended, due to which there is an operating profit for the bank. There is a decrease in the value of liabilities for few years from 2010 to 18, followed by sudden increase in the year 2019 because of surplus served in deposits. There is a decrease in the value of assets from few years 2011 to 18, followed by sudden increase in the 2019 and 20 because of surge in loans and advances. Profit margin as far as interest income is concerned is stable around 4% because the rate at which net interest income has increased at the same time, the average total assets has also increased at a uniform speed from 2010 to 20. Bank has surplus short-term liabilities. The reason may be the bank is giving more attractive interest on short-term deposits rather than long-term deposits. The value of economic equity ratio is around 9 to 11% because of the steady increase in owners' fund and total assets have increased in uniform rate. The highest economic equity ratio is in the year 2019, that is 0.1199. The prime assets have decreased in some years, 2012, 12 and 17 and 2019 and 20. The further part will be taken by Ambika.
Presenters, you are requested to complete your paper because last 1 minute is left only.
Implications and significance of the results. Net interest income is in continuous increase due to which there is an operating profit for the bank. Bank has surplus short-term liability. The reason is the bank is giving more attractive interest rates on short-term deposits rather than long-term deposits. Conclusion. The paper Assets and Liabilities Management with respect to HDFC Bank was helpful to know how they manage and monitor the risk and the mismatches between assets and liabilities. From the paper, it is clear that HDFC looks forward to generate a more favorable service in the near future. The balance sheet of the company has been consistent and gives a hint of growth and expansion. The increase in interest income for the consecutive years, so also the net interest income, proves that the profitability of the bank is also increasing over the last 10 years. The increase in the assets as well as liabilities of the bank shows the bank has improved balance sheet. References. These are the references.
No need to read out the references, ma'am. Thank you so very much.
Thank you, sir.
Thank you so very much for your presentation. Thank you so much.
Thank you.
Now I would like to invite the next presenters. The paper title is NPA and its importance with reference to the Muthoot Finance Limited. And the authors are Mr. Bhimesh Ganigir and Professor Saptarishi Mukherjee. I would like to request to both of the authors, please please share their screen and start the presentation.
Is it visible, sir?
Yes, sir. Yes, it is visible.
Good morning, everyone. I am Dinesh Gangir, student of KLE Society, IMSR Hubli. I am the author of this paper and the co-author is Professor Saptarshi Mukherjee, faculty KLE Society, IMSR Hubli. The paper title is NPA and its importance with reference to the Muthoot Finance Limited. Introduction. The asset is classified as the non-performing assets in the form of principal and the interest are not paid by the borrower for a period of 180 days. However, with the effect 2004, default is given to the borrower if they are not paid from 90 days. A non-performing assets refers to the classification for loans and advances that are in default or in arrears on scheduled payment of principal or interest. A non-performing assets was defined as credit in respect of which interest or installment of principal has remained past due for a specific period of time. Keywords: non-performing assets, provisions, standard assets, substandard assets, doubtful assets. The variable of the study are non-performing assets gloomy or greedy from Indian Prospective Research, Journal of Social Sciences, Karunakar M. Non-performing assets of public and private sector banks, a comparative study, South Asian Journal of Marketing and Management Research. Kaur K and Singh B. Study on performance of NPAs of Indian commercial banks, Asian Journal of Research in Banking and Finance, Raj K. Managing non-performing of assets in commercial banks, Kayan Jyoti, E-Journal, Khanna P. A comparative study on non-performing assets of SBI and associate and other public sector banks, SIT Journal Management Volume 2, Gupta B. NPA and its importance with reference to Assad Cooperative Bank, Gadag, Composition Theory, Volume 13, M. Saptarshi and Nikita Katote. And the research gap fulfilled by the study, the trend analysis of non-performing assets of the Muthoot Finance Limited. I have taken this from annual report of Muthoot Finance Limited from 2019. And next, hypothesis and objectives of the study. To understand the RBA provision norm, non-performing assets current circular. To understand NPA performance management of Muthoot Finance Limited. And the research methodology, nature of the study. The quality of the paper depends on the methodology adapted for the study and also it depends upon the nature of the paper. Use proper way of the research methodology is very essential part of the any research. In order to conduct a study, scientifically suitable methods and measures are to be followed. And sample design, the paper is based on secondary data. The major sources of information is the annual report from 2012 to 19 prepared by Muthoot Finance Limited, journals, magazines, and other similar studies. And the tools for data collection, annual reports from 2012 to 19, MS Excel, BSc, and NSC website. Tools for data collection, ratio analysis, trend analysis. And result of the study. From the substandard assets ratio of the bank in 2016 to 17 is 88.37%, which suddenly increased in 2017 to is 151.66%, which is very bad for the bank. It has increased because bank has not taken due care towards substandard assets. Doubtful asset ratio is 2015 to 16 is 50.72%. It increases in 2016 to 17 is 116.26% and also decrease in 2017 to 18 is rupees is 62.73% and also increase in 2018 to 19 is 93.74%. In bank ratio is increased its ratio in each year, which will be more bad effect from the bank. From the gross NPA ratio of the bank in 2012 to 13 is rupees 3,782.27, which increases in the year 2018 to 19 is rupees 9,326, which is bad for the bank, but the decrease in 2014-15 is rupees 4,160.51. It is good for the bank. Some of the factors leading to the increased occurrence of NPA and external, such as decreases in global commodity prices leading to slower exports. Some are more intrinsic to the Indian banking sector. In the NPA ratio in the year 2012 to 13 to 2018 to 19 of the Muthoot Finance Limited, NPA is decreasing every year. Efficiency of the bank recovery management to improve the efficiency and profitability of bank, the NPA need to be reduced and controlled by the bank. And the net NPA percentage is increased in the year 2014 to 15 is 1.88%, while in the year 2016 to 17, the net NPA percentage been come down to 1.69%. Bank need to reduce the NPA as much as possible. And the implication and significance of these results, based on first result, the sudden increase in substandard assets is bad for the bank. So the bank has taken due care towards that. It will help to improve the efficiency of the bank. Based on second result, the doubtful assets ratio is not consistent. So the bank need to be consistent in near future because it helps to increase the profitability of the bank. Based on third result, the bank need to reduce their gross NPA as much as possible because it helps to recover the efficiency of the bank. Based on last result, decrease in net NPA is good for the bank to improve the efficiency of the management. It helps to improve the profitability of the bank. The conclusion of my paper is the bank is following the well-established systems, policies and procedures with respect of NPAs and recovery. The bank should adopt some additional procedures for the recovering the NPAs with respect some additional strategies and policies to face the challenges to the competitors to improve quality of services and lending recovery. In sum, the present NPA assigned has been very useful in getting first-hand experience with respect to the management of NPA and in the banks with an insight into one of the important segment of recovery. NPA are one of the more important threatening issues faced by the banking sector in the current scenario. Through the efficient monetary mechanism and controlling measures, we can reduce the level of NPAs. The objective of our study is to find out the sector in which the higher NPAs, both public and private sector banks, causes and control measures for the rising NPA. These are the references. I have taken 6 references for writing this paper. Thank you.
Thank you very much, Mr. Bhimesh. Thank you very much. Now I would love to call the next paper presenter, and the paper title is Information Asymmetry in the Era of Technology-Enabled Corporate Reporting, an empirical investigation in context to Indian capital market. And the authors are Dr. Sukhpreet Kaur and Mr. Sushant Gupta.
Hello, good morning, everyone.
Yes, good morning, sir. You're audible.
Okay, sir. Thank you. So thank you, Prestige Institute, for giving an opportunity to present a paper. So the topic which we have presented over here has been sent as a paper is Information Asymmetry in the Era of Technology-Enabled Corporate Reporting, an empirical investigation in the context to Indian capital market. The authors are Dr. Sukhpreet Kaur and myself, Sushant, and we both are working in lovely professional university. So let us begin. So if I talk about the keywords of this particular paper, so corporate reporting would be 1, information asymmetry, 2nd, Indian capital market 3rd, and trading volume would be the 4th one. The variables which has been taken for this study is 1, that is XBRL. If I talk about XBRL, XBRL is an extensive business reporting language which has been made mandatory by MCA from year 2011. So all the companies who are registered under Companies Act 2013 or 1956, whichever was earlier, has to now present balance sheet, cash flows, and all the relevant information in a taxonomy that is an XBRL enabled taxonomy. So this is a sort of reporting language. Various authors who have also taken this as a variable are mentioned in front of them. Second variable is trading volume, which has been taken as a proxy for information asymmetry. So we know that due to the difference in the information, there is a lot of information asymmetry between investors and the corporate reporters. So that is a trading volume which we have taken, and many authors presented in front of them has also been taken this as a proxy. View control variables, which also impact the information asymmetry along with XBRL at the turnover, firm size, volatility, and stock price. So these 4 variables has been taken as a control variable for this study. Along with this, few researchers from the review who have already taken these variables are mentioned in front of you. So what is the basic research gap which has been fulfilled by this study? Clear. So if we talk about India, India has been one of the top nations who has compulsorily adopted XBRL format for filing the financial statements. Clear? Now, why it has become compulsory? Because on June 2011, on 6th June 2011, a circular was passed by Ministry of Corporate Affairs, whereby it was presented that all the companies has to present their particular financial statements in an XBRL format. Clear? So if this was a major step which was taken by Ministry of Corporate Affairs, so it was a necessary to find out that whether that XBRL adoption which was done in year 2011 has resulted into some sort of reduction in information asymmetry or not, or still there exists information asymmetry in the market. So that's why the key aim for this study was to investigate empirically that whether there is any reduction in the information symmetry with the adoption of XBRL by the companies in the capital market over the time or not. So the two objectives which has been taken into consideration for this study is one, that is to study that whether XBRL adoption has impacted or affected the information asymmetry pre and post adoption. So pre and post adoption data has been taken over here. And second was to analyze whether the impact of XBRL adoption on reducing information of asymmetry has been there or not. So if I talk about the hypothesis, so there are normally 6 hypotheses which we have taken. So first 5 hypotheses are for the variables pre and post. So there exists a significant difference between the mean score of trading volume pre and post. There exists a significant difference between mean score of turnover pre and post. There exists a significant difference between mean score of firm size, volatility, and stock price. And the last hypothesis, which would dealt with the adoption of XBRL, whether it has reduced the information asymmetry in capital market or not. So if I talk about the research methodology, the study is exploratory and descriptive both. When I talk about the sample design, we initially took Nifty 500 index, all the companies of Nifty 500 index as on 26th June 2020. Clear? So it was the data as on 26th June 2020. Further, as per the Ministry of Corporate Affairs in 2011, they made a circular that XBRL is not to be implemented or is not compulsory for power and financial sector. Clear? So we excluded the companies of power and financial sector because if XBRL is not important to them, is not mandatory to them, so it will be not a part of our study. So we were finally left out with 350 companies. Further, 60 companies were also excluded because they were not incorporated in pre-adoption. Pre-adoption, why? Because our data has been divided into 2 parts. From 2001 to 2011 is pre-adoption, and from 2011 to 2020 is post-adoption. So some of the companies were incorporated after 2011. So those were 60 companies. So that has also been excluded. So the final sample size was taken as 270 companies. The period of study is 20 years, beginning from 2001 to 2020, which has been divided into 2 parts, pre and post. And the total observations which came out to be was 88,978 observations. Tools for data collection, Capital and Database has been taken as a particular website or a database for collecting the data for all the variables, firm size, turnover, volatility, share price, and everything. So historical thing was taken, and the tools for data analysis has been applied is peer t-test and panel data regression. Okay, so let us move on to the results. So if I talk about the first objective, which was to identify that whether pre and post impact of XBRL has reduced an information asymmetry. So we can see that the mean scores of all the variables pre and post has changed. Clear? So firm size has a mean which has increased. Trading volume has also increased. It means we can say that the information asymmetry has decreased, due to which people have now more faith in buying a stock and more information was available. So that's why the trading volume was increased. Similarly, if the trading volume will be increased, the turnover will also increase. Volatility has been decreased. Clear. So the stock volatility has been decreased because now the information is readily available to each and every investor in a specific form. And the value of stock price, if we talk about the mean, has also increased. It means the demand is more. So if the demand is more, normally that is the same. No matter the other factors also plays an important role for stock price. But yes, when more will be the trading volume, automatically stock price will also increase. So that has confined our alternative hypothesis that there has been a significant difference in the values or the mean scores of all the variables pre and post. Second objective, which was to analyze that what was an impact of XBRL adoption on reducing information asymmetry, where trading volume has been taken as an independent variable. And after checking the stationarity of data and after applying Hausman test, it was concluded that fixed effect model is appropriate for studying this particular relation. So fixed effect model has been applied through panel regression. And it can be said that the particular model is fit because 93% of variations in dependent model has been explained by all the independent variables. Clear? So the independent variables taken in our study is significantly appropriate. So we can say that the effect of XBRL in adoption of XBRL in reducing information asymmetry has been stronger. And if I talk about the control variables, including firm size, turnover, volatility, stock price, we can examine that the variations in the information asymmetry of Indian stock market in terms of firm size was mentioned, and it is more easily than distributed. So turnover rate is also negatively related. Stocks with high turnover rate tends to attract more liquidity for investors, and information about the stock is likely to circulate around the investors. Volatility is positively associated with information asymmetry, which means that volatility indicates the degree of uncertainty or risk. So the market makers in the high volatile market tend to quote with high spread to evade risk. Stock price, if you see, is positively associated or related with information asymmetry. It means when a firm reports financial performance in an XBRL format, investors tend to evaluate the firm as less risky, which decreases the capital cost and increases the firm's stock price. And XBRL adoption has also reduced information asymmetry, which has also raised the firm stock price, which was already evident. And if you see, the support has been mentioned from the previous literatures, which also found the same results as per what the results was. But none of them found it in Indian context, and we are fulfilling this gap because we are studying this particular thing in Indian capital market. So if I talk about the implications and the significance of the results, so we know that capital market is something which plays an important role in mobilizing savings and channelizing them into productive investments. So the platforms like XBRL can be provided to market regulators and policymakers to minimize information asymmetry, so that the investments can be boosted and it could help the economy to develop faith to the investors on trading market. Thirdly, the adoption of XBRL can also or help in reducing information asymmetry, which increases the valuation of the companies. And if the valuation of the companies will increase, thus the cost of capital will also reduce. Listed firms can provide XBRL enabled application and services to their stakeholders. So there are XBRL taxonomies, if somebody is aware or not. So that can be provided to the stakeholders for increasing the investment. And finally, the authorities can also, the regulatory authorities can also enable the companies to disclose report, which can be used as a decision making for the stakeholders as per XBRL taxonomy. So XBRL taxonomy is a list of dictionaries which has been set up as an XBRL. So this is a coding system which is done, which will create their confidence in the long-term benefit of business. So finally, what can be concluded? We can conclude that web-based corporate disclosure is one of the major important measure to enhance the information asymmetry so that the faith can be built among the investors. And from the study, we can conclude that the XBRL adoption in Indian corporate sector has helped in reducing information asymmetry. On the other hand, significant effect on trading volume of the capital market was also found. So this was all from my side. Thank you.
Thank you. Up next, presentation on the topic cryptocurrency growth of an emerging medium of exchange. Kiran, are you there? Yes. Yes. Am I audible, Kiran? Now I'm announcing the name of next participants. A conceptual framework of microfinance factors influencing the Indian small finance banks growth, a study of client performance. Anushri D. Kini.
Hello, ma'am. Good morning.
Yeah, am I
Should I
audible?
present now?
Yeah.
Okay.
Are you able to share the screen? Okay.
Yes, yes.
Yeah.
Yeah, very good morning. It's Anushri Kini, a doctoral scholar from KLE Technological University, Hubballi, Karnataka. And co-authors of my paper is Dr. Shashidhar sir and Dr. S.V. Patil, who is my guide as well. The paper title goes as follows. It is a conceptual framework of microfinance factors influencing the Indian small finance banks growth, a study of client performance. I'm sorry, there is some voice at the outside. I'll just close the window. I'll just try to minimize the voice, please. I'm sorry. A broad area of my research is microfinance, which is a type of financial intermediation that eases the credit constraints among the unbanked segment of the society. And the major area of my study, that is small finance banks, by the definition they indicate which cater to the diverse needs of the financial services of the lowest income of the segment of the society. As per Reserve Bank India guidelines, the objective of setting these small finance banks is to mainly furthering the financial inclusion by providing a saving vehicle as well as supplying the credit to the small business units, small and marginal farmers, micro and small industries, as well as the unorganized sector entities. And this is mainly with the help of the high technology and low cost operation. Moving on to the main research, wherein I have focused here mainly on the several small finance bank microfinance factors which affects the clients of those banks and their performance. And based on these success factors of microfinance, I have framed a conceptual framework which is proposed to be tested and validated by the structural equation modeling. And for this purpose, I have considered 4 small finance banks, leading finance banks in the region of North Karnataka, namely Ujjivan, Equitas, Jana, and Suryodaya. Going with the review of literature, I have tapped many areas. In fact, being this is my doctoral research as well, I have just gone into the understanding of the history of microfinance, how the microfinance has grown over the period of time, and what is the connection between microfinance and financial inclusion, which are the different models of microfinance and the present status of microfinance, as well as systematic review mainly on the microfinance factors of the small finance banks, which is very relevant for the present paper. Then the research objectives in this line which I've identified are: one is analyzing the small finance bank model, which is mainly identified as a differentiated banking model, and the factors, investigating the factors which will affect the performance of its clients, and those clients are mainly microfinance clients, and that too they are the women segment of the society. And last objective, that is building a conceptual framework of the banks based on the success factors of these small finance banks. Then the factors identified based on the systematic literature review, even I had carried out in-depth interview with the bank managers of these 4 banks, and then the discussion with the microfinance experts helped me in identifying the 5 major factors which I have identified and named as accessibility with 5 indicators, service factor with 4 indicators, as well as the knowledge factor, digitalization, and the infrastructure with 4 to 5 indicators under each of these factors. The hypothesis that is proposed in this regard, which goes with mainly 5 independent factors, that is, one is accessibility and its influence, identify it as having a significant and positive relationship with their client performance. Similarly, the service factor, service to the clients by the banks, having a significant and positive relationship, and accordingly the knowledge about the banker by the clients, and the digitalization of the banking activities, as well as the infrastructure facilities which have been assumed to be having a positive and a significant relationship with that of the client's performance. Then the methodology that is identified in this aspect mainly goes with research design that is descriptive as well as exploratory, and the mixed methodology approach was adopted, starting with the qualitative approach and followed by the quantitative approach, that is the interview schedule which has been prepared for the purpose. The entire population segment was around about 6 lakhs, and the sampling frame were mainly 10 banks in all India which are performing, and the sample selection was mainly restricted to the North Karnataka, and 4 banks have been selected for the study, and the sampling unit are both the managers as well as the joint liability group clients of these banks. And the survey instrument which has been identified was the questionnaire, and the data analysis tool which was selected was the confirmatory factor analysis, and then followed by the structural equation modeling using the Amos technique. Now, moving on to the data analysis, based on the structural equation modeling, which helped to understand the influence of the microfinance factors on the client performance, and then it helped us in estimating the different dependent and independent relationship simultaneously. The 2-step methodology was adopted, which consists of the assessment of the constructs as well as the path model. Initially, CFA, which was carried out, and subsequently, the model was exposed to structural assessment using the Amos version 20. Then the figure with the confirmatory factor analysis is being shown like this, and then the conversion to validity indicators is supposed to be at least a minimum of 0.6%, wherein all the variances they indicated as satisfying the requirement, and as well as the discriminant validity of the constructs also indicated that all the diagonal values are more than that of the non-diagonal elements, which also was been satisfied. And the result of the structural model, which indicated with the values of the chi-square as well as the GFI, AGFI, and other values which were satisfactorily fitting the indices as recommended by Hare. And following a model that indicates a structural relationship, which was run with the help of the Amos, and path analysis and the hypothesis result was indicated with this table, which says the first 3 factors, that is accessibility, service, and the knowledge, which were accepted, but surprisingly the digitization and the infrastructure facilities at the bank been rejected from the point of view of the customers. So this is what the same thing has been identified in the results, and then looking into the recommendation, what I have suggested that we together said that the simplest delivery tools which are needed to be adopted by the small finance bank to provide their products to the clients. Being most of this segment is uneducated, hardly they have any education. So bankers need to guide the customer at each and every step, right from the disbursement of these microfinance loans till its repayment. A simple user-friendly technology which can be used by even these all less educated clients, which need to be introduced by the banks. If the technology is too difficult, the clients, of course, they will not use it. Trust in the digitization can be built by introducing the acknowledgement receipts from time to time, and the right balance which need to be struck between extending the wide network access points and controlling the cost to the customers. And being most of the customers are illiterate and uneducated, so they don't have the trust on the technology. So they may be even the staff members for that matter will be reluctant or ill-equipped to adopt to the new technology. So efforts are required to train them with respect to the digitalization. So this was the major recommendation which I would like to give with this paper, and the outcome of this study which will provide a clear evidence about the impact of microfinance factors of these banks and on the well-being of the poor, which will contribute to the body of knowledge of the literature. And the particular paper which also hopefully provide valuable guidelines to the to some extent to the policy makers of in India, and on which these microfinance factors that the small finance bank need to be focused to improve their client performance. And with this, I would like to conclude my study. Thank you so much.
Thank you very much, ma'am. Thank you very much. Now the next presenters are, and the paper title is Emerging Perspective of Off-Balance Sheet Activities and Its Determinants, Empirical Evidence from Public Sector Bank of India. And the author is Dr. Manish Dadhij. Hello, Dr. Manish Dadhij is available?
Yes, of course.
Okay, sir. Please share your screen, sir.
Yes, actually, sir, I am unable to share. So please request the previous one to unshare that link.
Okay.
Any other participant who is already sharing right now?
Have you sent your PPT to us?
Yeah. Yes, of course.
Yes. Just wait, sir.
Just wait 1 minute. Emerging.
Someone still sharing that screen.
Yeah, Anushri, just stop your screen sharing, Anushri. Yeah.
Yes. Yes, sir. You are.
Yes.
Yes. Manisha, this is your slide, right?
Yes, of course, madam.
Yeah.
But I would like to share my slide, ma'am. Can I share?
Okay.
Thank you.
I'm just stopping this. Okay.
Yes, sir. Share now.
Yes. Hope. Am I audible and the slide is visible?
Yes, sir. Yeah. Your slides are visible and you're audible also.
Yes, of course. So, very good morning to all of you, and I'm very thankful to Prestige Institution for giving me opportunity to present my paper, and especially in front of Professor S.K. Singh and Professor Sanjeev Gupta. So, without wasting much of your time, I would like to begin my study, and the title of my paper is Emerging Perspective of Off-Balance Sheet Activity and Its Determinants, Empirical Study from Public Sector Banks, along with three of my co-authors, Dr. Shailendra Singh, Dr. Renu, and Dr. Rajesh Meena. So as per the format given by the institute, so these are the keywords like capital adequacy, net interest margin, SLR, consumer price index, GDP, off-balance sheet activity. So let us start with the simple introduction. The term off balance sheet explains the corpus, which comprises all those activities that are not directly, depicting in balance sheet. It involves the management of fund in such a way that does not appear in financial account, but it has a profound effect on the value of shareholders and risk tolerance capacity of the bank. And same has been issued by the Barley 2012 and Bashi 2019. Moreover, the OBS fetches an eminent chunk of especially non-interest income, which was not given a significant attention in recent past. And the question arises like why to analyze off-balance sheet activity, what could be the possible impact, and how it is going to be considered major instruments concerning the financial position of public or private sector banks in India. So these are the variables of the study. So you can see the dependent variable is nothing but the corpus of a OBS of the selected bank, and the independent variable, of course, there are again two subcomponents. The part first is, of course, the indigenous variable that comprise interest income, total assets, return on assets, capital adequacy ratio, non-performing assets, net interest margin, and interest to total assets. The second part consists of extraneous variable, which includes GDP, inflation, exchange rate, and CRR. Let's discuss about the research gap fulfilled by the study. As we know that the concept of OBS is not popular in Indian banking system. So limited study observed to find out the vital contribution of OBS item on the profit of banking sectors in India. Most of the studies were conducted on OBS, risk exposures, leverage, and liquidity. So this creates a gap to look inside and throw light on the relationship between OBS and internal and external determinant that certainly have a profound effect on profitability of the banks. Let's discuss the important part of the study. Objective number 1, to analyze and give a comprehensive view of OBS component for public sector bank. Second, to investigate the magnitude up to which commercial banks are involved in non-interest income. And third, to study the nexus or the relationship and the impact of interest income by considering the variables that I already discussed, that is total assets, return on assets, CAR, NPA, NIM, interest to total assets, GDP, inflation, exchange, and CRR. And these are the 11 hypotheses. Hypothesis 1, the interest income influence the OBS of the selected bank. In same way, I will just read out the bank size affect the OBS income, capital adequacy, return on assets, net interest margin, interest income to total assets, NPA concerned with OBSA, GDP growth rate affects OBSA, inflation, exchange, and bank rate as well. So again, yet important slide, that is research methodology. First of all, nature of study. It's of course explorative study based on only secondary data. Sample design is of course purposive sampling technique, and the tools for data collection is of course, since it is a secondary study, so the data collected from annual reports, reports of RBI, reports of Indian Bank Association, reports on currency and finance, the magazine, the Economic Political Review, and research articles. Statistical tool is multiple regression is applied on cross-sectional data for the period of last 10 years, 2010 to 2019. And you can see the result of the study and the discussion. So here we applied the multiple regression and the dependent variable, as I already said, that the OBSA, where the I denotes the number of bank and the T denotes the
Excuse me,
number of
sir.
time.
Sorry to interrupt you. Actually,
Yes.
the time is running. So if it is possible, then you just conclude the.
Okay, sure. Is it possible? Possible. So yes, so this is the regression equation, and you can see the descriptive statistics of all these variables. And these are the selected banks, right, from SBI to Union Bank. So I selected these banks on the basis of market capitalization and total assets as on December 2019. These are the component of balance sheet for the selected public sector bank, which includes forward exchange contract, guarantees, acceptance endorsement, others, and total. This is the result of regression. You can see R and R square. Adjusted R squares, of course, it means all the variables is explaining the dependent variable up to 90%. The Durbin and Watson value is, of course, very satisfactory, 1.05, and the F value is 88.63, which is significant because the calculated value is less than 0.05. And this is the coefficient statistics of all the variables, and you can see the significant value which is mentioned in that in the last box. Whereas the collinearity statistics, including tolerance and VI value. And these are the results of hypotheses. You can see the hypothesis 1 and 2 accepted, further hypothesis 7 and 8 accepted, rest all other hypotheses either negative or not accepted. Implication and significance of the result. So this empirical study suggested that the technological, organizational, and institutional factors have profound effect on the management of non-interest income. Those studies again for the last 10 years that I already discussed. So having considered the core objectives, determinants, and solve hypothesis of OBS, we applied the regression model. Thus, the study is conducive for bankers to analyze and focus on generating the non-interest income to increase profitability and sustainable growth. The bank's management should review the outcomes of OBS at regular times for restructuring the financial resources and create a credible institutional environment. And last is conclusion. Having selected the prominent factors that I will not repeat all those factors. The results of this study is, of course, consistent with the earlier study, MIT 2016, MONIC 2017, in the analysis of OBS on the performance of commercial banks. The paradigm shift towards a new business line and generation of fee-based income has a paramount in the present context, which is again documented by the previous study. So there may be a progress in OBS activity due to the banking participation in derivatives market, information and communication technology, and application of AI and financial services. These are a few references. Thank you. Thank you, ma'am.
Thank you, sir. Up next, presentation on the topic cryptocurrency growth of an emerging medium of exchange.
Hello.
Yes.
Yes, ma'am. Can you hear me now?
Yeah.
Okay, I'll just share my screen.
Okay.
Yes, ma'am. Is the screen visible?
Yes.
Yes, good morning. My topic is cryptocurrency, growth of an emerging medium of exchange. These are the key words of the study: cryptocurrency, crypto coins, the regulatory challenges, virtual currency, and the legal challenges. The variables of the study. Now, this is the first study, that is Nakamoto 2018 in his paper, introduces the concept of a Bitcoin as a peer-to-peer electronic cash system due to the increasing use of technology across the globe and as a safer way of transfer. This is the first paper which talks about how Bitcoins which then are known as cryptocurrencies after this. Evans 2015 in his paper analyzes the compliance of distributed autonomous blockchain management systems like Bitcoin, also referred to as virtual currencies, within the requirement of Islamic banking and finance, and concludes that Bitcoin or a similar system might be a more appropriate medium of exchange in Islamic banking and finance than riba-backed central bank currencies, especially among the unbanked and in the small-scale cross-border trade. Anna, Barbaros, and Buckley 2015 in their paper proposed that after the global financial crisis of 2018, cryptocurrency and blockchain provide a very good substitute for transactions which if were in use, could have prevented the meltdown of 2008. This is what their paper suggests. Chauhan 2017 in his paper provides a focal point on the most important questions that are being raised in the area of cryptocurrencies and what type of research is being conducted to answer some of these questions. The research gap that is fulfilled by the study. The study looks to examine the ecosystem that exists in relation to cryptocurrencies in some major countries of the world and to shed light on the regulatory authorities' stance on the use of cryptocurrencies in their respective countries. The study also looks to examine the growth of cryptocurrencies across the world. The objectives of the study: to study the price movement of select major cryptocurrencies, to study the regulatory environment of select countries towards cryptocurrency. The detailed research methodology. The study looks to understand which countries have a favorable regulatory environment towards cryptocurrencies and the growth in the value of cryptocurrencies in the year from 2016 to 2019. The study is of an exploratory nature, and the data for the study has been collected from different secondary sources and government and central bank reports on the functioning and regulation of cryptocurrencies in their respective countries. Data is also collected from the website of CoinDesk, which is a provider of cryptocurrency price data. Now, the major cryptocurrencies, these are the top 5 in the world. That is Bitcoin, Ethereum, Litecoin, Ripple, and Mintchip. Mintchip is basically the Canadian government's official digital currency, which they have recently started 2-3 years back. Now, the results of the study and the discussion. This chart is basically of the price levels of Bitcoin between 2016 till the end of 2019. Bitcoins, if you see both Ethereum and Bitcoin had spiked somewhere around between 17 and 2018. Now, this is considered by many as the emergence of it, while some people also consider it as manipulation. So during the years from 2017 to 2018, there was a rise in the value of both the currencies and a subsequent fall in the same. Before 2016, the price of cryptocurrencies was virtually stable. Value of cryptocurrencies are volatile and are affected by sudden geopolitical changes in the regulatory landscape and can also be affected by manipulation, also called Bitcoin whales. Now here the term Bitcoin whales refers to the founder of the particular Bitcoin or cryptocurrency. So they normally can control the price and the amount of trading. So they can automatically manipulate the price. This is sometimes manipulation that is possible with cryptocurrencies. Hello, am I audible?
You're audible.
Okay. Now, these are the different types of activities permitted by different currencies with respect to cryptocurrencies. I have considered India, Russia, China, Switzerland, Japan, USA, and Canada here. Now, none of these countries allows Bitcoin or any other cryptocurrency as legal tender. Only Canada, as I said, has adopted a digital currency for their regulatory purposes. Now, some countries allow it as a payment method. So India, Russia, and China at the moment don't allow it, but Switzerland, Japan, USA, and Canada allow it as a payment method. Here, a payment method is kind of a barter exchange for a good or service that is provided. Next is the investment token. Now, in crypto terminology, investment token is basically whenever there is like an IPO, there is something called as an ICO, that is an initial coin offering. So here, people are allowed to participate in a startup by buying bitcoins of a particular startup or of a particular currency. Here, India and Russia are not allowing it, whereas the others are allowing it. In Japan, there is a certain consultation going on whether they should allow it or not. Now, the crypto exchanges that can function within the jurisdiction of a country. Now, India is a firm no. Russia is not said anything. Neither has said yes or no. China, Switzerland, Japan, USA, and Canada have agreed to it. In USA, for both payment methods and for crypto exchanges, registration and applicability of state laws matter. So, whichever state or whichever place they are in, the competent authority their cryptocurrencies have to register with to operate in that jurisdiction. The implications and significance of the results. Barter transactions. Countries like Russia and China allow virtual currencies to be traded for other goods or services. These transactions are similar to using virtual currency as a mode of payment. Mode of payment. Some countries like Switzerland allow for virtual currencies to be modes of payment. However, since they are not classified as legal tenders, parties are not legally obligated or obliged to accept them. So this cannot be forced on somebody in such countries. Legal tender, no country across the world treats virtual currencies or cryptocurrencies as legal tender unless the government itself is running the digital currency. Complete ban. Countries like India have completely banned virtual currency. It does not allow any sort of legal transactions in virtual currencies. Conclusion. In India, the central government and the Reserve Bank of India are not in favor of such digital currencies. However, the recent verdict in March 2020, just before the pandemic, given by the Supreme Court, has renewed hope for crypto traders and entities in India that operate in the said space. So here the Supreme Court has taken a view that it is a business and not a currency, and it is against the fundamental right of stopping somebody from doing business. Nevertheless, no country has accepted cryptocurrency as a legal tender, but has allowed it as a method of payment and barter, albeit without the enforceability of it on its intended recipients. Cryptocurrency can bring more positive changes to e-business and e-payment sector. However, cryptocurrency does not get that much of trust yet. Many concerns, challenges, and issues are existing in many cryptocurrency platforms. Until cryptocurrency is well regulated and controlled, users need to take extra precaution of using such virtual money. Thank you.
Thank you, sir. Up next, presentation on the topic, impact of recent financial inclusion scheme on economic and financial behavior of poorest of the poor. And the presenter is Firdaus Malik. Mr. Firdaus Malik.
Dr. Nandan.
Yes.
How many papers remaining for presentation?
Good morning. Three papers are remain to present.
Okay.
Good morning, Department of Economics, Baba Sahib Bhimrao Ambedkar Central University, Lucknow. Today I am going to speak about impact of recent financial inclusion schemes on the economic and financial behavior of poorest of the poor. Here, by economic, this recent policies means the financial policies which has been implemented since 2014. So the policies are PMJDY, Pradhan Mantri Mudra Yojana, and PMJDY, Pradhan Mantri Jan Dhan Yojana, PMSBY, and Atal Pension Yojana, and so on. The outline of the presentation is that I am going to discuss about this financial access, how financial access is responsible towards income, and how financial access represents expenditure pattern of slums and beggars. Then I will be discussing income and expenditure pattern. Then I will talk about how financial access is responsible towards financial behavior. And at the end, I will discuss the model multivariate analysis. So the research question, what is the motivation of this research? Actually, I want to try economic and financial behavior of to ultra urban poor, population, slums and beggars in Lucknow and Calcutta. So I will, make my literature review very brief. It is said by the post literature that financial inclusion promotes income and consumption pattern of the people. And by financial inclusion, we mean to have access of all financial products and services at an affordable cost at sustainable rates. It is the definition of World Bank. In India, financial determinants are playing a influencing role to the economic and financial performance of the people. The objective of the study is to analyze the impact of these recent schemes on economic and financial behavior. Our hypothesis is that there is significant impact of these schemes on economic and financial behavior. So the research methodology, this study is totally on a primary data sources which has been collected by the help of research schedule. The sample study is Lucknow and Calcutta. We have used two sampling techniques, stratified random sampling in case of slums, and the sample size is 300. In case of beggars, we have done sample by 100. So we have put it in a table form, some discussions as the time is very limited. I will try to explain here what we mean by this variable financial access. So actually it is a dichotomous variable. Those who have zero this category, they are said to be that they don't have any access to these financial schemes. Those who have one, they have access. So we want to make a cross tab relationship how financial access is representing the income of the people. There are categories of the income. So let us exclude this zero. If we see those who have access, so as per the income, their access is increasing as income is increasing. So we can conclude that there is a positive relationship between financial access and income. As people have financial access, there are chances that they may lie in the more income group. So the second question we have asked, nature of remuneration, is how financial access represents nature of remuneration. Nature of remuneration is how they are getting wages. So here our perception is those people who are getting monthly wages, they are better off, because it is supposed that people who are getting monthly wages, they are working almost 30 days in a month instead of daily and weekly, because they are having risks. They are sometimes they are daily based workers. Sometimes they get work, they are other days they are not getting, and weekly basis. So we have this perception from the literature that who are getting monthly salaries, they are better off. So if we exclude this zero, those who don't have access, let us forget about this one, and those who have access, let us talk about this. If we check monthly wise, they are the 50% people who have access. So similarly, we have asked this number of working days. Again, those who have maximum number of working days, and with respect to this having financial access, they are 44% people. So similarly, we have asked the question number of working days per day. So here it is reverse, that we are supposed that the people who are working 1 to 5 hours, so their access is 16%, and people who are working 6 to 10 hours per day, their access is 92.59%. So we consider that this category, this is the suitable working hour, and they are having maximum access instead of this. And those people who are working more than 11 to 15%, we consider them that they are forced to fulfill their economic needs. That is why they are working overtime. So going to that, here this table explains that what is the relationship of financial access and annual expenditure of the people. If we see, so those people who have access, they have less expenditures here. They are doing consuming less expenditure, 0.93%. So it means that those people who have access, they are saving their income in the banking system. And those people who don't have access, if we look at this table, so they are making more expenditures because they don't have this pattern of this financial access. So similarly, we have tried to mismatch the income expenditure mismatch gap in this expenditure, and then we have put it in this net income mismatch we have calculated. So mean income minus mean expenditure divided by mean income. We have tried to calculate how their income and expenditure are meeting each other. And we found in case of slum dwellers and beggars, I will also talk in next slides about beggars. So this particular slide is talks about slum. So we find that slum dwellers, both in Lucknow and Kolkata, they are lacking 25% income to meet their daily expenditures. So there is a mismatch of 25%. Then we have further segregated it to know those people who have access, what is their status, those people who don't have access, what is their status. So we have calculated it, individually. Those slum dwellers who are having, access towards the banking, they lack 24% of their income to meet their daily expenditure. Those who don't have, they are lacking 25% of income to fulfill their daily expenditure. Similarly, in case of beggars, we have done the same. So in general, for the beggars, they are lacking 38% of their income to meet their daily expenditures. And then we have tried towards those who have access, they are lacking only 20%. And those who don't have access, they are lacking 30%.
Primarily to them. Then the financial viability, of course, they focus on the financial viability of the project also. Compared to Generation X, they just venture it. They just start. Generation Y showed the reflection of gig economy where the competition, networking, and course sharing was commonly used.
Hello? Yeah. Yes. Is everything fine now? Can I proceed?
Yes, sir. You are audible. Please continue, sir.
Yeah. So in case of beggars, those who have access, they are lacking 25% of their income to meet their expenditures. But in general, of the beggars, those who don't have access, they are lacking 38%. So from these equations, both in case of slums and beggars, we find that those who have access, they are better. They are lacking less money to meet their expenditure, and those who don't have access, they are having too much income expenditure mismatch gap. Then we have run some hypothesis testing. Our first hypothesis is that access and non-access explains the income position of the people. So we have accepted this null hypothesis that yes, access and non-access explains the income position of the people. Then our second hypothesis is that access and non-access plays a significant role in expenditure, which has been also accepted that yes, access and non-access explains the significant role in expenditure. So then we have asked certain questions about financial behavior. I will skip it here because we have less time. So I am asking that what is the relationship of financial access towards the financial behavior? Like we have asked a question, do you have a budget, and so on. These are descriptive statistics, but I have I there I can explain them very well. So here we will skip them. So the modeling is that we are using variable this financial access index. How we have calculated it. Actually, there are 15 products in the questionnaire. We have asked about the questions, and we have calculated an index. How we have calculated an index? Those among slums or beggars, those who have access of any one of the product, we have taken them. We have made it as a proxy variable. Those who have access, we have categorized them that yes, they have access. And those who don't have any access to any of the products, almost there are 15 products. We have asked the question, and we have nullified them 0. So it is a dichotomous variable. Those who have access of any of the products, they are considered among the accessors. And similarly, we have developed financial behavior model. Here we have asked the 4 questions, which I have secured that we have asked about the question who is managing the budget and so on. So here the equation shows us that what are the chances, what is the probability that the household or the beggar will tell us the right answer. So finally we are equating this, making the result to run in this equation. We are normalizing it, and we are calculating the minimum maximum method. So therefore our multivariate analysis model shows that we have 3 dependent variables: financial behavior index variable, annual income, annual expenditure, and we have 1 independent variable, that is financial access. So the findings of our study is that financial access has a positive relationship with income. Those who have financial access are found among better income groups. Financial access holders are better than non-financial access, but financial access is not significant contributor to the income. The second finding is that financial access reflects the better working days in comparison to the non-access holders. Financial access holders are better in position to compare non-access with respect to the number of working hours. Moreover,
Please conclude. Please conclude. You have already passed your allotted time.
I have, sir, made it very brief. I don't know, I have passed more than 6 minutes. Although I have concluded, let me conclude. So from conclusion, the hypothesis, the objective of the study was that to check what is the aggregate impact of financial inclusion schemes on economic and financial behavior. Our hypothesis is that these sections of the people are relying on formal financial institutions for credit, but we reject our hypothesis that poor people are settled outside from the formal banking and are far away from the financial inclusion. Thank you very much.
Thank you, sir. Up next, presenter is Gunjan Dwivedi ma'am, and the title of the paper is Economic Growth, Trade Openness, Technological Innovation, Urbanization and Carbon Emission Evidence from Emerging Economics. Gunjan ma'am, are you there?
Yes, ma'am.
Okay, I'm just sharing your PPT. Is it visible, ma'am?
Yes, ma'am.
Okay.
Good afternoon, all of you. The paper title is Economic Growth, Trade Openness, Technological Innovation, Urbanization, and Carbon Emission, Evidence from Emerging Economies. I am Professor Gunjan Dwivedi, and this paper is actually done in the guidance of Dr. Navita Nathani ma'am. And in this paper, actually, we have talked about related the industrial development. As we all know that industrial development replaced the conventional economies and results in improved efficiency in production and paced up the economic growth. But somehow we have also faced the consequences of this, that economic growth, and economic development and preservation of environment are predominant challenges for the humanity now. The increasing intimidation of global warming and its effect on environmental deterioration and economic development has attracted the attention on the affair that exists between economic growth, trade openness, innovation, urbanization, and carbon emission on emerging economies. And in the emerging economies, we have taken BRICS countries, that is Brazil, Russia, India, China, and South Africa. If we talk about the variables of the study, our dependent variable is carbon emission, and independent variables are economic growth, trade openness, technological innovation, and urbanization. So economic growth is basically concerned with the economic process, progress and advancement of an economy. It is mainly measured in the terms of GDP, that is gross domestic product. Trade openness is generally defined as a measure of economic policies that either confine or invite trade between countries. In the technological innovation, we have taken the new or significantly modified technological products and processes, where we can say technological novelty emerges unlike improvements from their performance characteristics. In urbanization, it basically describes both the increasing footprint of urban areas and the increasing percentage of the urban population. And carbon emission is the main greenhouse gas released through the human activities. Emission means the release of greenhouse gases and their precursors into the environment. So here we are with some of the interesting facts about per capita CO2 emissions. We can see the global disparity in the carbon footprints, and we can also see the condition of different countries like Brazil, Russia, India, China, and South Africa. Ma'am, next one, please. This is the actual condition of 2018 in the as per the carbon dioxide emissions hit all-time high. So we can see the condition how it is increases in, up to the 2018 from 1990. Ma'am, next one. But somehow it's a good news for us that 2020 was a corona year, and it was a highly negative year for all of us, but somehow it is good for the environment because we can see that the global carbon emissions fall in 2020. And we can see there that if we talk about India, we talk about China, so somehow there is decrease in this carbon emission just because of the lockdown and all the conditions. So this is the objective of our study, that is to establish the relationship among carbon emission and economic growth, trade openness, technological innovation, and urbanization. This is the research methodology part. The study is basically causal in nature, and it was conducted on the emerging economies, as I have already said, that is on the BRICS countries. The sampling technique was non-probability purposive sampling technique. The data was collected from official websites of World Bank, Global Carbon Atlas, and GEM, that is Global Entrepreneurship Monitor. For analysis purpose, we have applied unit root test, fixed effect and random effect, and Hausman test. And the statistical software was used as eViews. This is the model of the study, that is economic growth, trade openness, technological innovation, and urbanization make the impact of carbon emission. This is the proposed model. If we talk about the results and discussion part, so these are the results of panel unit root test. Our variables are like this, that is carbon emission, gross domestic product, trade openness, technological innovation, and urbanization. And we found that the probability value is 0.000. So we can say that the p-value is less than 0.05. So our null hypothesis assumes unit root is rejected and our data is stationary. These are the regression results, and we can see here, as per the Hausman test, the outcome says that the value of chi-square is insignificant as 0.1933. Probabilities, and hence the null hypothesis is not rejected. Our model is random effect. From the panel regression F value 11.31867 with p-value 0.00 says that the model is fit. The R square value is 0.798499, and that implies that 79.84% variation in the dependent variable. Carbon emission is explained by at least one dependent variable. Ma'am, the conclusion slide. Okay. The study concluded that increase in the economic growth, trade openness, and urbanization will have an impact on the increase of carbon emission in the atmosphere. The study also recommended that technological innovation has no impact on increase of carbon emission in the atmosphere, and it is also supported by a study that was conducted in 1999 by Lawrence H. Calder. When it was checked on 10% label of significance, we found that, and it stated that technological innovation can affect the environment in the long run if its practices not adopted in the right way. So this is all about from my side. Thank you so much.
Thank you, ma'am. Up next, I'm just going to announce the name of Dr. Abhay Singh Chauhan. Sir, are you there?
Yes, madam.
And the paper title is Economic Growth and International Trade Case Studies for Asia.
Yeah.
Sir, are you able to share a PPT?
Exactly.
Okay.
Is it visible, madam?
It is just start. Okay, yeah, it is visible.
Okay. So yes, very good afternoon to each and everyone. Thank you for giving me this opportunity to present my paper on this auspicious platform. So the title of the paper is Economic Growth and International Trade, the case study for the ASEAN nations, that is Association of Southeast Asian Nations. And the author of this paper is Dr. Tarika Singh Sikkarwal. And me being the co-author of this paper, I am going to present the whole this presentation. Okay, so now coming to the variable of the study. So if you talk about the variable of the study, so we have basically 3 independent variables, and we have computed to this part. And the variables are export, imports, government expenditures, and being dependent GDP and BOP, balance of payment. So now I am just with the paucity of time, I'm just coming to the objective of the paper directly. So the objective of this paper is to determine the relationship between international trade and economic growth for ASEAN nations. And the nations which we have considered in this whole part is Cambodia, Singapore, Thailand, Indonesia, Myanmar, Brunei, Philippines, Laos, and Malaysia. So I just like to add on one more country in this, that is Malaysia. The relationship between export and GDP on ASEAN nations. And then third objective is to determine the relationship between export and government expenditure for ASEAN nations. And likewise, we have more 5 determinants as well, and in the objectives to determine the relationship between imports and GDP for ASEAN nations. Then the next one is to determine the relationship between imports and government expenditure. And the last one is to determine the relationship between import and BOP, that is balance of payment for the ASEAN nations. So on the basis of review, we have framed an hypothesis, and the hypothesis that is a null hypothesis, which came to the conclusion that there is no cause and effect relationship between international trade and economic growth. So now coming to the research methodology part. So the study was basically causal in nature, and second data was used for collecting the whole, for conducting the whole research. And population was all the nations of the world, and the data was collected for the period of 10 years from 2008 to 18. And the sampling elements, individual ASEAN nations has been, the data was collected from individual ASEAN nations, including Cambodia, Singapore, Thailand, Indonesia, Myanmar, Brunei, Philippines, Vietnam, Laos, and Malaysia. So the sampling technique goes with the non-probability purposive sampling technique, and the tools used for data collection was the secondary source from international trade and economic growth for Asian nations, and the source for such as World Bank, Economic Forum, etc. were used. So we have applied a unit 2 test to check the stationarity of the data, and the normality of the residuals was checked through Jarque-Bera test, and then ADF test was actually applied for the unit 2 of the data, and the same simple linear regression was used to determine the relationship between the variables. So okay, so now coming that the bond returns are taken on the monthly basis, and the time frame has taken for 10 years, and the same time frame for the data of FED ratio and individual, which we have taken earlier as well. So this is it. And now coming to the next part for the results and discussions. So the first result is for the unit 2 test. So to fulfill the objectives of the study, initially basic statistics of the data was checked, and it included checking the stationarity through unit 2 test and ADF test initially. So now coming to the next one. So we can see over here that all the hypotheses that is rejected on the levels of few are on level and none, and few are on first difference and intercepts, then level and intercept, then first difference and intercepts, and level and trend and intercepts. So this we have country-wise analysis we have done. So this is the chart for unit 2 test. So in this we have covered all the 10 countries: Thailand, Vietnam, Philippines, Myanmar, Malaysia, Laos, Cambodia, Brunei, Indonesia, Singapore. And now coming to the next one, that is test for normality. So for the test for normality and for regression test, we'll just apply, we'll just open the Word file so that we can check over there. Okay, so is it visible to everyone?
Yes, sir.
Okay. So this is a normality test. Normality of the residuals is checked, and in this study, the hypothesis for this test is the test distribution is normal, and so the null hypothesis for normal distribution of data is rejected for Malaysia and Cambodia. In this particularly test, you can see, and there may be a greater volatility in these data series as they may follow other kinds of distribution pattern. But as these series are already log transformed, normality of these series can be assumed, and further we can apply for regression. So we can go for regression proceeds for. So now coming to regression test. So this is what regression says all about. So the fulfillment of the objective started from finding the absence and presence of unit root, but basically nation-wise analysis we have done in this as well. So the estimates coefficient of long-run relationship between economic growth, GDP and export is insignificant that we have found in all the countries, and then GDP and import is insignificant. Then GDP and BOP is insignificant. Government expenditure and balance of payment is significant, and the government expenditure and export is insignificant, and then government expenditure and import is insignificant. This result has opposed the previous studies which has been done by Bahamis and Oskoi and Ulsi in 1993, and Ahmed and Hamiran in 1995, and Wong, where most of them adopting the Johansen co-integration techniques. Then the beta coefficient negative for exports, and hence the percentage change in the export would lead to the 100% change in GDP, but in an opposite direction that we can see in all these countries and all these tests. Then the beta coefficient negative in import as well, and hence the percentage change in imports would lead to the percentage change in the GDP, but in an opposite direction, same in the case as the earlier. Then the beta coefficient negative for BOP, and hence the percentage change, whatever the percentage change is, that we can calculate over this like this in this manner, multiplied by 100. So the percentage change in BOP would lead to 100% change in GDP, but in an opposite direction, and the beta coefficient negative for BOP. Hence, the percentage change in BOP will lead to the percentage change in government expenditure, sorry, in opposite direction. Then the beta coefficient positive for export. Hence, the percentage change in export would lead to the percentage change in government expenditure, but in same direction. And the beta coefficient positive for import as well. And we can see that the percentage change in import would lead to the percentage change in government expenditure, but in the same direction. So this means that the crisis slowed down the economy of all these countries which we are talking about, that is Cambodia, Singapore, Thailand, Indonesia, Myanmar, Brunei, Philippines, Vietnam, Laos, and Malaysia. So now coming to the next part, that is conclusion. Okay. So this paper has tried to reinvestigate the validity of export-led growth hypothesis for ASEAN nations countries by adopting a more recent econometrics techniques known as regression. That we proposed our model to investigate the lead to justify the hypothesis for export-led growth, and the result shows that this has a positive impact on the economic growth. Whereas if we talk about exports and imports has a negative impact on the growth. Moreover, we also found that the hypothesis-led export for Malaysia, Indonesia, Thailand, and Philippines are supported in both short run and long run. And moreover, the study finds that the impact of exports and import is positive with significant contribution to total factor productivity growth that is considered as the technological progress of these countries. And if we talk about the policy recommendations, then from the perspective of policy recommendations, as we can see, export appears among the key determinants that contributes towards the growth of ASEAN 10 nations. And the government should focus on implementing effective microeconomic policies, which will help in stabilizing its balance of trade. For focus on implementing the effective balance of trade and liberalization of nation trades, and drawing attentions towards export-led foreign direct investments in the nations. Apart from these, there is a necessity on government's part to make sure that there is an adequate availability to workforce and financial resources, as it will contribute to the high level of economic growth. If we talk about in the further findings also, so we have seen that in few of the findings, reforms that there has been a significant contributions of import and export in attaining the greater GDP contributions, which is generated by these nations by employing enormous inputs in order to generate output. So this is the submission from my side. Thank you very much for your patience listening. Thank you so much.
Thank you, sir. Up next, coming to the last presentation of the session, and the title of the presentation is The Impact of Changes in H-1B Visa Rules on Indian IT Companies in the Age of Corona, a Pre and Post Evidence, presented by Dr. Nandan Valinkar. Please, sir.
Thank you very much, ma'am. I'm sharing I'm sharing my screen. It is uploaded. Yes, is it visible to all?
Yes, sir.
Yes, okay. Thank you very much. Good afternoon to one and all. As this is the last research paper of this technical session, so I will like to brief presentation of that. This is the topic and impact of changes in H-1B visa rules on Indian IT companies in the age of Corona, a pre and post evidence, authored by me and my co-author, that is Pulkit Chandra. The H-1B visa is a business-based non-migrant visa for impermanent specialists. For this visa, a business must offer work in the US and apply for your H-1B visa, appeal to with the US Immigration Department. They said don't appeal to be a work allows, which enables you to get a visa stamp on work in the US for that business. Current scene during age of Corona. Due to coronavirus COVID-19 outbreak, players in India's IT services, according to industry analysts, facing a significant slowdown in growth during this financial year. Reports claims that top software exporters, including Tata Consultancy Services, Infosys, and Excel Technologies, are impacted most by the recent technology spending from clients in the US and Europe following lockdowns across the globe. The objective of this research to check the difference between pre and post effect of announcement of changes in H-1B visa regulations on Indian IT companies in the age of Corona. The research methodology, the study is causal in nature. It is aimed to find out the difference between pre and post effect of lockdown announcement of changes in H-1B visa regulations on Indian IT sector. The study was claimed out to analyze the relationship in context. The data was taken for the comparative study between pre and post announcement period for 66 days from pre period, that is 18th January 2020 to 24th March 2020, and the post period is 25th of March 2020 to 30th May 2020. The methodology, the population of the study was companies of IT sector and Nifty from IT sector indices was considered as sample frame. 66 days from pre-period, and that is already discussed with me. And sampling element was closing prices of Nifty indices of IT company. Non-probability judgmental sampling techniques was used to select the sample. Reliability data source was used to collect the data, like NECindia.com. Okay. The tools used for data analysis. The study was conducted through following tools, that is stationarity was checked by ADF test, and the plot of graph or the series of identify the breakpoint. Initially, first regression prior to Kusumov square test, then Chow test has been applied, then Kusumov square test has been applied, and again one regression is applied for the create dummy with using the dummy variable with regressor, and finally the second regression of the post Kusumov square test. The result discussion, the unit root 2 test has revealed that the probability value, that is 0.000, and the level of significance 1% order of integration. The reduced statistics is 28.456. That is shows that there is no unit root. Then we talk this is the breakpoint where we have found that the graph is plotted to identify the breakpoint of the series. Identification of a breakpoint is necessary to detect the structural break using the Chow test. Such breakpoint divides the series in two parts: time period before the structural break and after the structural break. In the above graph, in the following graph, the deviation shows the sharp change in the series and considered as a break. In this series, the closing price of IT index on 24th of March 2020 has found a sharp change in the series. This is the first regression that is applied to prior to Kusumov square test. As per the breakpoint, the 24th March of 2020, the first regression model was tested through introducing the dummy variable with the score 0 and 1. 0 is provided to prior period, and the 1 is provided to post period of 24th of March. Then this is the outcome of regression model has shown that independent variable, that is dummy variable 0.000, have significant impact on IT indices as the probability value of T statistics is less than 0.05. Now we have applied the Chow breakpoint test, that is the most important test of this particular research paper, to validate the initial breakpoint and the results of first regression model. Chow breakpoint test is applied. The assumption of Chow breakpoint test is there is no breaks at specified breakpoint, initial breakpoint. The following results were obtained by applying Chow test. From the above table, it is resulted that p-value, that is 0.000 of Wald statistics is less than standard value, that is 0.05. So the null hypothesis which is mentioned is rejected. Hence, there are structural breaks in specified breakpoint. And this is the Kusum square test. Through the above graph of Kusumov square test, to prove the stability of a model at 5% significance level, the overall model is not fit. To improve the fitness of regression model, the structural break from Kusumov square is considered to create a new dummy variable with the score 0 and 1 is provided to the period of 3rd April, and 1 is provided to post period of 3rd April. And this is the actual test of the this particular research paper. And this is the second regression model after applying the Kusumov square test. And the outcome is showing that the regression model has shown test dummy variable 0.000 have significant impact on IT indices as the probability value of T statistics is less than 0.05. And these are the model summary. R square is 46% near about, and the probability value of F statistics is already 0.000, that is less than the 5% level of significance, and reveals that the model is good fit. Now, these are the implications. For IT companies. With the help of this research, IT companies came to know about the rules and norms of H-1B visa and amendments of H-1B visa policy. The literature may be useful to provide an alert to the IT companies to deal with the H-1B visa norms and what are positive or negative effects faced by them after the announcement of changes in H-1B visa policy. These are the suggestions. The most important suggestion is that it is suggested that the policymakers or government and management of IT sector should strictly keep an eye on the movement of US government specifically in terms of IT policy and H-1B visa policy, so that the employees which are migrated from India to serve in the US may be alert with their future futures. And this is the conclusion remarks. US government takes strict actions and announces the new changes in its H-1B visa so that their people get more employment as compared to Indians. Some Indian IT workers are highly educated from prestigious institutions, have high-paying jobs, and are running high technology companies. More people have comparatively low-level jobs, but they are still working in US, but not sure about their future in US. The proposed study has supported the above scenario by revealing the facts that H-1B visa announcement have a significant effect upon performance of IT industry, which indicates a threatening scenario to the Indian IT workforce engaged in US companies. Thank you. Thank you so very much.
Thank you, sir. Actually, we have done with all the presentations of the session. So next, now I would like to request Dr. Sanjeev Gupta, respective co-session chair, to give the brief about the technical session. Sir, please.
Thank you. सबसे पहले सेशन चेयर प्रोफेसर एसके सिंह, डिपार्टमेंट ऑफ कॉमर्स, डॉक्टर जगत होस्ट डॉक्टर नंदन वेलनकर, होस्ट डॉक्टर अभय सिंह, राइट? यस सर। मैं सेशन ऑलरेडी लंबा कर चुका है, सभी लोगों के पेपर बहुत अच्छे थे और उन्होंने प्रेजेंटेशन भी बहुत अच्छा किया, टेक्नोलॉजी और सभी कुछ बहुत अच्छी थी। मैं केवल दो शब्द कहना चाहूंगा कि इन सब के साथ साथ अगर शोधार्थी है वो इस बात पे भी अगर आगे कि वर्तमान में कोविड पीरियड चल रहा है, तो हमने ये महसूस किया है कि कोविड-19 में सभी लोग परेशान हुए, इसके बावजूद मिडिल क्लास फाइनेंशियली ज्यादा स्टेबल कंपैरेटिवली प्रीवियस ईयर। नंबर 2, मैंने ये महसूस किया है कि अगर छोटी-छोटी बातें जैसे स्वच्छता है, हाइजीन है, हेल्दी लाइफस्टाइल है, अगर इनमें हमने कोविड-19 में चेंज किया है, तो इससे हमारी फाइनेंशियल स्टेबिलिटी बढ़ी है, क्योंकि इन सब भले ही कोविड के कारण हमने इनको इम्प्लीमेंट किया, इसके कारण एक आम आदमी की जो मेडिकल एक्सपेंडिचर है वो बहुत कम। हमने देखा है कि पहले डॉक्टरों की भीड़ रहती थी, छोटी-छोटी बात पे हम डॉक्टर के जाते थे, अब 1 साल से हम देख रहे हैं कि हम डॉक्टर के नहीं जा रहे, उसके बावजूद भी हम पहले से ज्यादा हेल्दी हैं, पहले से ज्यादा स्वस्थ हैं। ये सीजन आया है, सबसे ज्यादा वायरल सीजन था, मेरे किसी को कोई वायरल इन्फेक्शन नहीं हुआ, कोई खांसी छींक जुकाम नहीं हुआ ड्यू टू हेल्थी लाइफस्टाइल। तो इन चीजों को भी अगर हम फाइनेंशियल रिसर्च में इंक्लूड करें कि इनका क्या इम्पैक्ट पड़ रहा है, तो यदि इन चीजों को हम कहना चाहिए अगर रूटीन लाइफस्टाइल में अगर देश में लागू कर सके तो शायद जो है ये बहुत हमारी इकोनॉमी के लिए बहुत ज्यादा फायदेमंद साबित हो सकता है। दूसरी बात, इस कोविड पीरियड में पूरी न्यूज आई है इंडियन इकोनॉमी उसके बावजूद भी हमने देखा कि मार्च अप्रैल मई के बाद हमारा स्टॉक मार्केट कंटिन्यूअस अप जा रहा है, जबकि दुनिया कह रही है कि हमारी इकोनॉमी स्लिप हो रही है, बिजनेस बंद पड़े हुए हैं, रोजगार नहीं है, एग्रीकल्चर डाउन जा रहा है, उसके बावजूद भी हमारा स्टॉक मार्केट ऑल टाइम हाई पे जा रहा है। तो क्या कारण है कि ये सब हो रहा है? उस पे भी हम शोध करते समय इन टॉपिक्स को ले सकते हैं, राइट?
Thank you, sir.
Thank you, sir. Definitely, we will consider the keywords which you have mentioned in your speech. Definitely, the upcoming research will be based on these types of the keywords which you have mentioned. Thank you, sir. Up next, I would like to request to our session chair, Professor Dr. S.K. Singh, to give the concluding remark about the session. Sir, please, sir.
Am I audible, Nandan ji?
Yes, sir. Yes, sir. Yes, sir. You are audible, sir.
Professor S.S. Bhakar, Member Executive Council, Jivaji University, Gwalior, and Director, Prestige Institute of Management, Gwalior. Professor Sanjeev Gupta, Co-Chairman of this technical session. Professor Phyllis Enge, Keynote Speaker of this session. Faculty members, research scholars, and students. सबसे पहले मैं प्रेस्टीज इंस्टीट्यूट ऑफ मैनेजमेंट के डायरेक्टर एवं उनकी टीम को बधाई देना चाहूंगा कि इस पैंडेमिक के दौरान भी आपने पिछले वर्षों की तरह अपनी रिसर्च एक्टिविटीज जारी रखी हैं। इस टेक्निकल सेशन में 13 पेपर प्रेजेंट किए गए हैं और ऑल पेपर्स आर वेरी गुड एंड प्रेजेंटेड इन वेरी गुड मैनर। और विशेषकर मैं नंदन जी को धन्यवाद देना चाहूंगा, इनका टाइम मैनेजमेंट जो है बहुत बढ़िया रहा और इन्होंने जो है पूरा टेक्निकल सेशन बहुत अच्छी तरह कंडक्ट किया।
थैंक यू।
मैं केवल एक दो छोटे छोटे सुझाव देना चाहूंगा कि शोधार्थियों को अपनी रुचि का एहसास होना चाहिए कि उनकी रुचि काय में है। शोध में आगे बढ़ने से पहले अगर हमें अपनी रुचि का एहसास हो जाएगा, हमारा इंटरेस्ट क्या है, तो शोध में बहुत अधिक सकारात्मक परिणाम सामने आ सकते हैं। जिनका इंटरेस्ट ऑफ एरिया और स्पेशलाइजेशन ऑफ एरिया एक ही होता है, उन लोगों से बहुत अधिक सकारात्मक परिणामों की अपेक्षा की जा सकती है। मुझे ऐसे बहुत से लोगों से मिलने का मौका मिला है जो एचआर में बहुत बेहतर कर सकते हैं, लेकिन उनका स्पेशलाइजेशन मार्केटिंग है या फाइनेंस या कुछ और है। Although it is not a simple task to know that what actual specialization is, what actual interest, यह ज्ञात करना या जानना बहुत आसान नहीं है, बहुत कठिन है। लेकिन इसे जानने के लिए हम अपने टीचर्स की मदद ले सकते हैं, हम अपने गाइड से कांटेक्ट कर सकते हैं और उसके बाद में ही आगे बढ़ना चाहिए। जो मुझे लगता है जिस तरह से मैनेजमेंट का पहला फंक्शन प्लानिंग होता है, तो हम उन्हें ऊपर नीचे नहीं कर सकते हैं। अगर हम मैनेजमेंट के फंक्शंस को ऊपर नीचे कर देंगे तो वो परिणाम हमें प्राप्त नहीं होंगे जो होने चाहिए। तो सबसे महत्वपूर्ण है कि हमें अपनी रुचि के बारे में एहसास होना चाहिए। शायद इसीलिए जो हमारी नई नेशनल एजुकेशन पॉलिसी आई है उसमें इस बात का प्रोविजन किया गया है कि अगर किसी साइंस के स्टूडेंट को या कॉमर्स के स्टूडेंट को हिस्ट्री या म्यूजिक पढ़ना है तो उसे वह पढ़ने की स्वतंत्रता दी गई है। और शायद केवल इसलिए दी गई है कि जरूरी नहीं है कि हमें अपनी रुचि का एहसास पहले हो जाए, इसमें समय भी लग सकता है। मैं अपनी बात समाप्त करना चाहूंगा। केवल जो हमारी नेशनल एजुकेशन पॉलिसी आई है, इसका जो मेन ऑब्जेक्ट है, इसके बारे में चर्चा करके मैं अपनी बात समाप्त करना चाहूंगा कि शैक्षिक प्रणाली का उद्देश्य अच्छे इंसानों का विकास करना है जो तर्क संगत विचार और कार्य करने में सक्षम हो, जिनमें करुणा और सहानुभूति, साहस और लचीलापन, वैज्ञानिक चिंतन और रचनात्मक कल्पना शक्ति एवं नैतिक मूल्य हों। इसका उद्देश्य ऐसे उत्पादक लोगों को तैयार करना है जो कि अपने संविधान द्वारा परिकल्पित समावेशी और बहुलतावादी समाज के निर्माण में बेहतर तरीके से योगदान करें। यह अपनी नेशनल एजुकेशन पॉलिसी का मुख्य उद्देश्य है, या जिसे कहें आधारभूत सिद्धांत है। जैसा कि हमारे डॉक्टर संजीव गुप्ता जी ने बताया कि कोरोना में हमें क्या क्या सतर्कता बरतनी चाहिए। हम लोग मास्क का उपयोग करें, बात करते समय एक दूसरे से पर्याप्त दूरी रखें, साबुन से हाथ धोते रहें, सैनिटाइज करते रहें। इसका भी विशेष ध्यान रखें कि हमें कैसे खांसना है, कैसे छींकना है। और एक अंत में बात मैं और कहना चाहूंगा कि भले ही WHO की क्रेडिबिलिटी बहुत खत्म करने की कोशिश की गई है, लेकिन फिर भी हम WHO को फॉलो करते रहें जहां तक कोरोना पेंडेमिक का सवाल है। आप सभी लोगों ने मुझे समय दिया। थैंक यू वेरी मच।
Thank you, sir. Thank you very much. Up next, now I would like to request Dr. Nandan Valinkar to propose a vote of thanks.
Thank you very much, madam. No duty is more urgent than that of returning thanks. With these words, on behalf of entire Prestige family, I extend my heartiest thanks to our Honorable Session Chair, Dr. S.K. Singh, Professor at School of Commerce and Business Studies, Faculty of Commerce, Jivaji University, Gwalior, for accepting our invitation to grace this session. Thank you very much, sir. I convey my thanks to our respected co-session chair, Dr. Sanjeev Gupta, Professor in Department of Commerce at Government SLP PG College, Gwalior, sparing most precious time with us. Thank you so very much, sir. My sincere thanks are also due to Professor Phyllis Ange Kudluk, Faculty of Applied Sciences at Danis University, for giving such a wonderful and knowledgeable keynote speech. Thank you so much, ma'am. I am extremely thankful to the presenters who came from various academic institutions to participate in 12th International Conference and share their presentation and quality research work with us. Thank you so much to each and everyone. I am also thankful to the representative of all electronic media for extending their support and providing a wide coverage of entire international conference of Prestige Roman in Gwalior. Thank you so very much. Jai Hind, Jai Bharat.
Thank you, sir. And again, I would like to thank all the delegates. And first of all, I would like to thank to our session chair, Professor S.K. Singh, sir. Thanks for coming and thanks for chairing this session. Thank you so much, sir. I would like to thank you. Thanks to Professor Dr. Sanjeev Gupta, sir. Thank you, sir, for coming and chairing the session. Thank you so much, sir.
Thank you.
I would like to thank to Professor Phyllis Ange Kudluk, ma'am, for sparing her valuable time with us and sparing the valuable time with us. And I know it is very difficult to you because I think you are in because I know you have very busy schedule in that. So thank you so much, ma'am. Thank you all the participants, all the presenters. Thank you very much. So I just announced this session is complete. Thank you so much.
Thank you very much.
Thank you all.
Thank you, ma'am.
Thank you, ma'am.
Thank you.